Hello guys, welcome back to my channel. I am Vivek. I am helping you step by step to become a successful trader. One of my students, Arthav, who made $10,000 and he shared me the strategy yesterday. Now we are here to start our session and we are going to make so much money and let's see. Alright guys, most of us in trading follow the trend. The price often moves in one direction all through. Sometimes there are local pullbacks. Mini reversal in the opposite direction. The trend is usually predictable, but it is rather sudden and therefore loss-making retracement points. This strategy solves that problem. Let's set up my student Arthav setup. Follow my lead. Calculate and the momentum on the chart for Kettner's set EMA period and remove the background fill done. We leave momentum as it is and move straight to analyze the signals. Look at the colors of the bars. At the bottom, if momentum is red, the chart almost always falls. This is our first condition for trade. Right now, by the way, it's red. The chart is declining, but that is not enough for us. With calendar, we look for a bounce points of the channel boundaries. They almost always indicate a market reversal. Another important signal, a breaker of a central channel line. It can serve as independent reason for a trade. In any case, we always react to price movement near the channel boundaries, and this almost constantly gives us a reason to enter a position. Works both way. The price moves towards a reversal, allowing us to regulate open trade even within a narrow channel. Like here, during a more pronounced trend, it's even more convicted. The key is that Kettner signals align with the momentum. We can trade sideways, movement, trends, and even corrections within a trend. We trade everything. Here our indicator diverges. So for the first trade, I will look for another entry point. We will continue now. Just entry short and euro versus Canadian dollar. This is an ideal situation to start the session. See for yourself. This chart is falling. Momentum is almost declining and in the red zone, which is we can have a trade. The asset has long existed. The Kettner's boundaries breaking through it's the key level, and there is a level where the price should gradually upwards or reach. It's quite possible we will see during the trade. Well now, all the thing left is to wait for the trade outcomes. It's starting extremely well. By the way, we are hitting the level I show you up, and it seems so far away. This often happens when perfectly understand what's happening with the asset. It's not just a working strategy that helps build an experience, guys. Okay, this trade is total seller dominance. No need to worry about it. Yes, first profitable position today. Now the price is declining. Where to go next? There are not too many options. While there is time, I will increase $1,000 for a bet. If nothing unexpected happens now, I will re-enter the market immediately. Always good to take a short pause. Okay, I am back in the game. Yes, we are entering on the green candle. Here, oh look, we don't let to confuse you. For us, this is our entry for a better position. You could say the market is giving us a discount. In other words, it's better to enter higher during a decline and lower during a rise. This way you give yourself a slightly advantageous within the 1 minute expiration time frame. Many traders prefers opening trade strictly at the opening a new candle, but I don't think that's hard rule. Both approaches have their pros and cons, and in my experience they produce similar outcomes in the long run. I am just one of those guys who doesn't like waiting until the end of the minute. The asset is keep on the edge, times to running out. Still we have shared moving downward, so it's not all bad. Just a few more seconds. Yes, second profitable trade in one row, guys. Now let's switch asset and move a new chart. Entering short again here. Trading sideways price movement. Momentum is declining and the price is currently breaking out the channel downward. Of course, I will show you the target level. Through many of have probably already learned to spot these levels by eye. For the rest, let me explain again about trading levels. I keep reminding you they are extremely important in the trading. They help you understand where the price are headed. Levels are like stop or checkpoints along the entire route. If you look closely, they encapsulated the whole chart. Without them, the market seems random, but once you draw the levels, everything suddenly makes such more easy and more sense. The price either bounce off these zones or break through them. Our job is simple to spot this during the trading. Well, we are almost closing this trade. Okay, another profitable trade. To reinforce what we learned, I will now find another setup, this time on the fresh chart. Wow, now we will test the system in a real chaos. Economic data just dropped. I am expecting a decline here since the asset broke this level and exited the Klempner channel. But don't do this if you knew. If you just starting out, it's better to avoid these sharp spikes. Most of the time, they mean uncontrollable risk. What happens on the screen right now is called volatility. Huge sums of money have entered the market, so pricing being pushed or massive demand and supply. I recently did a detailed breakdown in my Telegram channel about the danger of trading during news events. If you want to learn such strategies and easily want to execute profit, you have to subscribe my channel, link in the below. Alright, the storm have passed and quite profitable for us. Great, the trade is closed in a profit and the balance is over $3,500. But I won't take any more risk in such unstable market. I am wrapping up and the trading session here. Oh yes, this strategy really deserves a big attention. I have made so many profit while using this strategy. Want me to analyze your trading system? Looking to boost your profitability? DM me now in my Telegram channel. So guys, please subscribe my channel and hit the like button. See you in the next video.